SoFi CEO Anthony Noto is very optimistic about the company's prospects. And that's understandable given that the company's revenue growth accelerated in the latest quarter. They achieved yet another quarter of profitability on the bottom line. The non-lending business is growing faster than the lending business, which is de-risking the business overall, which has been great news. And then macroeconomically, the unemployment in the United States remains low. Interest rates are now starting to decrease, given that the central bank is now lowering interest rates. They're on a path to lower interest rates, so fears of a recession have subsided. So the CEO has several reasons to be optimistic about the company's future, which I'm going to discuss in more detail in this video here. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Right, so in the company's latest earnings call, the CEO said that our performance in the hard times is what gives me strong confidence in our future. Today, we face fewer headwinds than any point in our history. Wow, that sounds really optimistic. We're heading into 2025 with the most favorable conditions of the last 7 years, with declining interest rates, a stable economy, the most diverse business we've ever had, with more members in our ecosystem and more products that serve their needs than ever before. And true, there's a lot for SoFi CEO to be excited about. The 2025 year is expected to be much better than 2024 for the company's prospects. 2024, remember, there was a lot of concerns coming into this year about a recession because the central bank was trying to slow the economy. The central bank was more afraid of inflation getting out of control. And one of the ways the central bank controls inflation is by increasing interest rates to restrict economic activity, because when you go to buy something that requires financing like a car loan or a home loan, if the interest rate is higher, your monthly payment is higher and you're less interested in buying that product. And so it restricts the economy, constrains growth, and that's on purpose to control inflation. But now, as of this recording, the central bank in the United States is more concerned about slowing job growth. Job growth in the US has slowed considerably over the last 6 months, and inflation is down close to the Fed's 2% target. So inflation looks like it's under control, although not completely, not just yet, but it's trending that direction quickly. And then on the flip side, job growth is slowing down considerably, which has the central bank concerned. They don't want job growth to turn negative. And so they've already started lowering interest rates, and they've signaled that they're going to continue lowering interest rate because they don't want to restrict the economy anymore. They don't want to put that restriction on the economy. The reason they put the restriction on the economy is because they want to control inflation. They feel like inflation is under control. And so now they're going to kind of let go of the economy. They don't want to stimulate it. They don't want to stimulate the economy, but they also don't want to restrict it. And so that's going to be a tailwind for SoFi in 2025. As the central bank lowers that, interest rates should fall in response to that central bank activity. And then that will increase lending activity or borrowing activity, economic activity, which is all good news for SoFi. Whether you're buying a home, SoFi could capture some customers with their home loan segment, or if you just want to take out a personal loan, the interest rate should be lower and thereby increase interest in SoFi's lending products. One more point I will add to that is the existing loan portfolio. If the central bank can remove the restriction and let the economy kind of recalibrate and kind of settle down at an equilibrium without experiencing huge increases in unemployment, then SoFi's existing loan portfolio will perform better. They will have fewer defaults and thereby lower risk because those previous loans that they've made, people will make the payments, they'll have jobs, they'll have income to be able to make the payments. So for all those reasons, SoFi management very excited heading into 2025. They feel like they dodged the bullet in 2024, avoiding a recession. They were one of the more pessimistic financial companies coming into 2024. They were taking the approach of the recession being a high likelihood event in 2024. Now it looks like we dodged it, and SoFi management is a lot more optimistic. They go on to talk about the market for consumer financial services, how massive it is, and how historically poorly served that market is. And that's true to some extent. Some parts of this market is very poorly served, and other parts are reasonably well served. For instance, I would feel like the credit card segment of financial services are well served. Credit cards work reasonably well. You don't see very many constraints in that market. You don't see very many reasons for disruption in that market. However, other parts of the market, like home loans, I would say are not as well served, and you do see a lot of constraints, and the process is not as smooth as it should be. And I would say that that market is poorly served. So if SoFi can come in there and serve that market better, that's kudos to them. Also, the banking segment, I would agree that it's poorly served. Branches, local branches, brick and mortar banks, the services at these local branches are getting worse and worse and worse. The staff is decreasing. You're finding empty desks very often. Almost every time I go into one of these local branches, whether it be Bank of America, JP Morgan, or Wells Fargo, empty desks all over the place. And then when I look at the teller windows, long lines and only a few tellers at the windows. So what's the point of having these branches and paying so much to have a local branch if you're not going to optimize its use, if you're not going to support it with trained staff ready to help your customers? And so I agree with SoFi, and I think their strategy of digital banking comes at an opportune time when their rivals are pulling back from servicing their local branches. And so these new markets, not to mention those looking for new investment accounts, new checking accounts, new personal loans, they're all increasing. They're all growing year over year. And SoFi says that meeting all of a person's financial needs in one place with world-class products delivered digitally gives them a massive advantage, and I agree. And this is why you'll hear me say it's a matter of when, not if, they become a top 10 financial institution. So understandably, the SoFi CEO bullish on the company's prospects, and it seems to be working all in SoFi's favor. Now, this could reverse if their rivals decide to reverse course and say, you know what, our advantage against some of these digital banks is our presence in the community. We have all of these branches. That's our advantage. Why not lean into that? Why not staff these facilities with people that can help customers that walk in and really lean into those? If they do undertake that strategy and these local brick and mortar banks become more helpful to their communities, then this trend could reverse. But I don't see that happening. I see all the major branches cutting back on staffing these local, these community centers, these brick and mortar centers, and that just works in SoFi's favor. So I would agree with the SoFi CEO here. Their prospects look good, both for the near term and longer term, because of their strategy. Having all in one business really helps consumers. They don't have to go to one company for home loans, another company for car loans, another company for your investment account. People are getting fatigued with all of these different accounts and all of these different businesses they have to deal with. Consolidation is going to be something that consumers start to aggressively look for, given the fatigue that we're feeling with all of these different accounts that we have to manage in our daily lives. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.